Hello, Culture Matters podcast. Before I introduce you to our guest, here's a quote I picked just for this episode. Markets can stay irrational longer than you can stay solvent. John Maynard Keynes, my dear friend Phil Mancuso is back for another market hour, I hope. Episode 126 of the Culture Matters podcast, title Why Culture Matters in the Markets, and episode 110, the mortgage market maker. Check out those episodes of the Culture Matters podcast. Very different conversation than we're going to have today. I know that. Phil, thanks for coming back. I greatly appreciate you. And part of me feels like I've mentioned this quote in conversation before with us, but I don't care. I want to say it again, and I want your thoughts on it. Markets can stay irrational longer than you can stay solvent. Like, what comes to mind?
Well, by the way, thanks for having me back, and I love doing these, and I love our conversations on camera, off camera,
Yeah.
morning, noon, and night. They're always fun. It's funny. One of the things we discussed was, hey, we try to be a little bit more general because I might not release this today. And then the first question you ask me, I want to answer it in the context of today. So I'm going to do it, Jay.
The best you can, my friend.
Yeah. At 8:30 this morning, whatever day this is, we won't say, okay? A certain little report called the CPI report, the Consumer Price Index report, came out. And look, I'm not going to sit here and say that this was the best CPI report in the history of man, that, we showed sort of massive deflation. We fixed everything. Everything is great. But here's what I am going to say. And I actually just recorded a Mancuso Market Minute that will be released shortly after we're done here, which is, when you look at all the components other than energy, we either saw a month-over-month decrease or a massive month-over-month decrease. Several of these things turned negative, other than energy, which kind of buoyed this a little bit. And the market's initial reaction, as it should have been, was a bit of a relief that this is working, that the Fed, kind of has done their job. And if we just let it breathe a little bit, that will continue to bear itself out as it has. I mean, inflation has dropped, at this point by roughly half in a year, okay? And in some components of it by a third, or I should say by 2/3 rather. And not minutes after this release, two Fed governors, presidents, whoever they were different people, came out basically shit talk. We haven't done enough, talking up rates, being hawks. So it speaks to exactly your point, right? I'm right on inflation. I've been right. I continue to be right. Okay, almost a year to the day, I called that we've won the battle. We could stop here. You're going to continue to see the drop doesn't happen overnight. We talked about how by December, that was sort of my month. November, December was when we're going to really start to see it. And we did. And we continue to see it. We broke a 5 handle on core, where we've almost broke a 3 handle headline. We were 3 flat. If 2% is the Fed's stated objective, I mean, hell, we're almost there, for goodness sakes. I think we started this journey at 9.1 headline, if I'm not mistaken. Okay. So you don't need to be Kreskin, and I'm not 100% sure everybody knows who Kreskin is anymore. But you don't need to, read minds, tell the future, be a clairvoyant to say, if things keep going the way they're going, we're going to get there. And again, they couldn't even let it breathe, and already we're talking up interest rates. So you could be right, but if the market, or dare I say the people who are controlling the market, have a different narrative or a different message, or a different version of right, then
Could we perceive them as irrational when in fact they could be omitting their rationality?
it's really not their job to do that, but certainly.
Meaning that there's a conflict of visions between, the powers that be and those
Well,
that are at the.
yeah, I mean, Jay, the stated vision, their words, not mine, right? Is full employment and 2% inflation, right? Price, what they would consider price stability. And so if that's the agenda, okay, and I'm going to take this two ways, in a vacuum, and then again, using their words, using Jay Powell's words, not mine. If your stated objective is 2% inflation, and we've gone from 9 to 3, okay, again, it would be irrational not to at least assume that we are headed there. To make the statement that the fight's not over, okay, is a ridiculous statement in the concept and the construct of understanding how monetary policy works. How delayed and or potentially distorted some of the data might be. Now, their words, we don't fully understand the effects of, monetary policy, in this economy. Powell's testimony a couple weeks ago specifically said that basically anything that they did or the economy did, or economic policy or fiscal policy, monetary policy, had little to no effect on inflation for 2 or 3 decades. Again, this is what he said in sworn testimony. And he was right about that, right? Is the ebb and flow of anything and everything that happened in our economy really since the 90s hasn't really affected prices or wages for that matter. Now, the answer to that is, in my opinion, my truth, plain as day, and I've been screaming from the rooftops about it, which is information and automation are price and wage killers, period. Okay? You don't have to be an economist to know that.
That's deflation.
Correct. Yeah.
Because things become cheaper.
Correct. Exactly right. So
automation, information.
Correct. Are deflationary. Simple economics. Why? They sort of spell competition.
So like if something's automated, it costs less costly.
Correct.
And more information's available. Well, that makes me feel like even what we're doing now, right? This is available to us. We have more power than we did 50 years ago as just like general citizens.
Correct.
Like I could read a textbook about Ludwig von Mises and know more than like an idiot, PhD that never read that or something.
100%.
Okay,
Correct.
That's kind of what you mean by that.
Exactly.
Okay, I'm following you. I want to make sure the audience does too.
Sprinkle in a little bit of globalization, which is a part of information. It's a part of the internet. And now you have this hyper competitive economy. So I've got Brand X. Brand X figured to make this widget, I can now use a computer. I can now use an assembly line. And it used to cost me 100 humans at X to push out these widgets. And further, the people who bought these widgets were forced to buy these widgets because they were a localized presence. They didn't have a car. They didn't have a plane. They didn't know from being able to go 5 towns over to buy from my competitor. Okay.
And how they thought was influenced by channels of media that were all centralized.
Correct.
Okay. Now we're on it. Yeah.
So Brand X is making this stuff cheaper and easier. In the absence of globalization and information, what that did in the past was just help Brand X make more of a profit. Because what's my motivation to pass on those savings, those productivity savings? Nothing.
But market forces aren't influencing the institution.
Correct.
Now, the power dynamic.
Yes.
Okay.
So now here comes information sidling up alongside automation. Brand Y. Well, you're not so smart. I do the same thing. And potentially, Jay, because you did it first, and I'm over here in this country, in this different part of the world, I don't subscribe to, adhere to, am regulated by, and otherwise, all the things that you're doing, I can actually steal your idea or improve upon it or piggyback off of it. And so instead of getting my system to do the work of 10, I can get it to do the work of 12. It didn't cost me the R&D that it cost you. So I'm going to do it for even less. Look what just happened somewhat recently with Twitter and Threads.
I'm on Threads now. I was told, get on there.
Elon Musk and here's what's the scary part of that. He lets go dead weight. These people, sorry to say, were dead weight. 85 or ish % of his business he let go overnight, and Twitter didn't miss a beat. Those people move over to Brand Y, stand up a company legally or illegally. I guess we'll find that out. He's threatened litigation. I mean, now think about this. How long could Threads potentially operate without revenue? Being that they basically just stood this business up overnight.
Years.
We'd
have to look at the balance sheet, but yeah, probably.
Drafting off the investment of Twitter, right? Now you could say, and Elon Musk might be having this meeting right now. Hey guys, there's this one part of Twitter that I hate, that you hate, that the world hates, that we need to fix. And they could look at him and say, you're 100% right, boss, but where do we get the money? Right? Threads doesn't have that problem. So not only can they stand up this business for a fraction of the cost, if any, but they can improve upon it, both from an experience basis, a cost basis. Because now I say, well, I got to deal with all these ads on Twitter. There aren't any ads, and I'm not saying this literally, but because they can operate more efficiently, there aren't any ads. So it effectively costs me less. Costs me 1 second less to do this, and that time is money.
Yeah.
So I'm saying, adopt this to other businesses. So now what does Twitter have to do? Twitter has to build a better product. How do they build a better product? Well, they probably lower their price. And we're at a we've been in a race to the bottom in just about every business and every industry since the advent of the internet.
When you say we, you mean our culture,
world.
Our country.
Yes, the world. But for us, the United States, I would argue, yes, that's a race to the bottom. For some of these emerging cultures, okay, that race to the so-called bottom is kind of a top for them, right? It's
Interesting.
like, holy cow.
Slingshot.
Yeah, it's 100%. So we're paying doctors in third world countries to work in call centers at a wage of, let's just call it $7,000 US. A doctor here on shore is like, well, I wouldn't work as a doctor for 7,000 US, much less in a call center that's beneath my, education and pedigree. These people are like, hell, I was working for 1,000 US yesterday. Who needs to be a doctor? Let me work in this call center and then I'm smart enough to run it. Raise me to 10,000 US. So how can we have, see, to me, the joke of this whole thing is, how can we have inflation understanding this, right? Again, simple laws of economics. Information automation and globalization are deflationary, period.
Do you think that the combination of the supply chain being stagnant for a period of time and the printing of money could have created a momentary inflation that now?
Oh yeah. No.
Like that, meaning the idea. Okay, so is this the idea? Is the idea that the fear of the entrenched inflation is more an ideology or leverage? It has a false premise because of technological advancement and cultural evolution. That's your main thesis here.
Correct. Yeah, it's not even a question to answer.
It's like lip service. It's like PR for some other types of chess moves on the chessboard.
Yeah.
That's me adding that. I'm not saying that you're saying that. That's my interpretation of it.
Yeah, you've said it perfectly, Jay. I mean, we're fighting entrenched inflation because that's what we do. Because that's what we're used to. Because that's what we're to believe is the problem. Here is, and I'm oversimplifying, in my truth, what happened. We had a swan event in COVID, okay? The world shut down for somewhere between 5 minutes and 5 weeks, 5 months, what have you. Some opened up sooner than others, right? We had this massive stimulus pumped into the economy, into the world's economies, all right? Then we figured out very quickly, this isn't as bad as we thought. We can open up some businesses. We could go back to some degree of normalcy. People could work from home. So the first thing that we saw was some of the money that we thought we were going to spend, we didn't have to. So we began to spend it frivolously, or more frivolously than it was intended, okay? Raises instead of just status quo and not letting people, or worse, letting people go. For some people, boats and they were misappropriating their stimulus money.
Yeah.
I've always joked about the Gucci thing. Dude, hundreds and hundreds of people every day online at the Millennium Mall buying Gucci. If they could truly afford to buy Gucci, there would have been
now,
malls.
I want to be clear for the podcast's sake that Jenna got me a pair and I've worn them almost 4 days a week for 2 years. All right. They're worn pretty well. Like it gets one pair. I just want to, for the audience, I've said what I've said.
So you did your part to create this inflationary event. But it was sort of like, look, if and I hate to pick on Gucci because by the way, I mean, it's not, they're just a symbolism for me, right? And it's like, because they were a viable business pre-COVID, don't misunderstand me, but there weren't lines out the mall door for them. So the bottom line is that at the end of the day, folks were either legally or illegally, in some cases, sort of misappropriating this stimulus money. Because that swan-like event for the greater economy wasn't as bad as what the government initially thought it was. And so just like, and I've said this before, maybe on here, just like previous booms, dot-com boom, inheritance boom, intra-year tax cut boom, housing, so-called housing boom. When that money, sure, it might have created quick bursts, as this did. When that money ran out, the only thing that would get you to keep spending money is earned income. Full stop. And that's something we've not seen an increase in decades.
Really?
So, correct. The last couple of years, sure, there's been some degree of a material increase in income. But Jay, let's talk about even this last non-farm payroll, where we saw an increase of, I think it was 4.4, 4.8% year over year wage increase. That would be considered hot, no doubt about it. But if your pay hasn't gone up in 30 years, and in 1 year you got a 5% pay increase, I mean, are you flush? Of course you're not.
Doesn't mean much, no.
Doesn't mean much. So net, here's the punchline. Fed report, not an El Presidente report. We have officially run out of our COVID savings. Period. It's gone, and it's been gone. Look at consumption. Look at ISM prices. This party was over summer of 21. You know, some of this pushed into Q4 21. The party was over. The money stopped getting spent en masse. You have now this widening wealth gap. You have more people who held on to more money. That is true. So if we've run out of our COVID savings, Jay, this question is now begged to be asked, is if in aggregate we've run out of our COVID savings, but we also know, I will say anecdotally, although I think that we know, quite literally, that a lot of people held on to a lot more money and the wealth gap has widened. Here's the other end of that. Then what happened to everybody else? See, if there's still X number of dollars in our economy from this COVID stimulus, but on average, we're at zero or negative. Well, these people are worse off today. And so what you're seeing, and
when you say these people, those that are in the lower echelon, like Main Street, essentially.
I would argue all of Main Street. So it's
because
not
it's almost like so the audience could see like a picture or an example would be the guy that owns Gucci became the richest man in the world.
Yes.
He's a representation of that, like almost like, the nuclear bomb goes off and that puff of smoke booms out like a mushroom. I visualize the mushroom being that savings you're talking about at the top, the COVID relief money being gone, and all the savings being at the top of the mushroom cloud, which is like owner of Gucci is the richest man in the world, representing the 1% beyond, and the Main Street, the basis of economic solvency, the everyday person being worse off than they appear, which, so is that kind of where
100% non-scientific numbers? Okay. This is just sort of directionally accurate in my opinion. If you had less than $100,000 in cash going into COVID, okay, you are very likely worse off today than you were pre-COVID. Okay. If you had something like, on the order of 400,000 in cash, and when I say cash, 401k, checking, savings, stocks. Okay. So it doesn't even have to be liquid. Maybe you have 300,000 all in your 401k, but you have nothing in your checking account. Okay. You've got $300,000 ish pre-COVID. You are probably worse off than you were before COVID. 500 to $1 million, you're likely slightly better off. Once you now get into the million plus, if you had $2-3 million coming into COVID, my guess is now you're worth 8 figures, 10, 12 million, 15 million. If you had 30 million, I'd be shocked if you're not worth upwards of 100, right? on average.
Yep.
And then the people that were worth 100 million plus coming into COVID, I mean, you've got billionaires, you've got 500 millionaires. You know, those numbers have kind of roughly doubled over the last few years. And when I talked very early on in COVID internally, once we got through May and these numbers started to sort of, coagulate a bit, I said, this is a K-shaped recovery, period. And the 1% is probably going to become 10, 20%. And the middle class is going to get smaller. And then our bottom 5, 10, 20% is probably going to become 10, 20, 30%. And I believe that once all of this dust settles, and we're already starting to see that in the numbers I'm looking at, that's what you're going to find. Is that this is going to be incredibly difficult on the middle class, because some things have become, or maybe better to be said, sort of the working class, because some things have become more expensive. To get back to the supply chain issue, I have argued, the way I've seen it, demand pull inflation, which is what monetary policy can attack, is what the Fed can control. I've got some money, it's burning a hole, I've got to spend it. And if this costs twice as much as it cost yesterday, I don't care, because I want it.
That's demand pull inflation.
That's demand pull inflation, summer of 21. Yes. Since
What is the psychology that undergirds that? I guess the money isn't tied to the behavioral psychology that presupposed it. It's some external source that it's come from.
It's sort of the wealth effect. I feel wealthy, so therefore I care less or act more careless.
Well, if I feel wealthy, is there a correlation with like what I've not earned? So for example, if I have something that I'm not physically laboring over, it's a different interaction than if I have something in that's just gone up in value. I have nothing to do with it. Psychologically, there's a complete night and day paradigm.
100%.
Like there's an entitlement in that somewhere, got to be, as an observer. That's my thought. It's like for demand pull inflation to be a psychological phenomenon amongst groups, there's got to be a bunch of elements of like entitlement, envy, all sorts of weird.
Agreed. You value the money less. I'm
going to value something less that I don't physically trade my time and relationships for. I'm going to value something more that I can't see my kid at his soccer game, because I got to do this thing that I'm passionate about.
Yes.
If I get to go to the soccer game and my something else, I just get a check, I didn't do anything with, I'll value it less, right? It feels like, is that kind of the psychology behind the demand for? So that's a phenomenon that occurs that the powers that be are supposed to try to check and balance at some degree, I guess, or maybe
right. So how do you curb or eliminate as was it Alan Greenspan? I don't think it was Alan Greenspan, not Ben Bernanke. Irrational exuberance, right? How do you curb that wealth effect, that irrationalism, right? By eliminating the wealth effect.
How about this? A curfew, timeout, and you know what I'm saying?
Yes.
Like, is that kind of but that could be taken too far. You do that too. Like you do a curfew, timeout, and I'm missing. What are the things that chores?
So, dude, when you understand, I think that what the Fed has gotten wrong at its core, in its most simplest terms, is that people's behavioral economics and people's behavior around feeling wealthy or feeling poor isn't something that gets turned on and off like a light switch. Excuse me. No, hold on. The opposite. Isn't a dimmer, that it is a light switch.
Dimmer.
They think it's a dimmer. And the first example of understanding how wrong they are is the Great Depression. Okay. And it's not a secret. People talk about this. People talk about how their grandmothers or their great grandmothers still had stocked can pantries, okay, 40 years later, just because. The people that suffered through the Depression were unable to turn those feelings off, as many of the people that suffered through the Great Recession, the so-called Great Recession. So what the Fed doesn't get, and we just had a recent study of mortgages, if rates get above 5.5%, applications almost get totally shut off, for example. Below 5.5%, go time. Above 5.5%, fuck you.
Interesting.
So people's behaviors around money are a light switch, not a dimmer. There's tremendous evidence to that effect. The Fed treats it like a dimmer. And so it's sort of like, well, if I raise rates to the moon, or I print money like crazy and drop rates, there's going to be sort of a simmer down or a bubble up. No, it's like, holy shit, I've got a bill. Look, my stocks are up. You know, I just got a check from Biden. It's like, but Joe.
Where are we going? Where are we taking the kids?
Yeah, Joe. I mean, last week we were eating peanut butter and jelly. And now we're talking fucking Gucci. Let's go, baby. Vacation. That's literally sort of what has happened every single fucking time, right? And so they haven't figured out, are unwilling to figure out, or have figured out that you can't figure out how to just get people to go, hey, don't stop spending money. Just don't act like a buffoon. Don't not start spending money. Just don't act like a buffoon. And so that's why it's smash into a wall or money for everybody. And so they arguably, and I can't prove it, can't disprove it, probably only needed to hike once, because they only needed to send the message that the party's over. Okay. What if I had to guess in the deepest, darkest corners, recesses of their minds and corners of the conversations, is stocks haven't taken a real hit. And that is a huge part of the wealth effect. When people look at their 401k, or again, partly also because it's not tied to their effort, not tied to their hours, is like, well, I made $5,000 yesterday in my stocks, let's go to dinner. And who cares what we pay for it? So this is never going to get better unless we can figure out how to curb our habits versus full go, full send / full stop.
Where's the opportunity in all this? If we disagree with the proposition, maybe in that disagreement, we formed a thesis, and maybe we understand there's maybe potentially we think we understand it a bit better than they even do. So now I'm thinking, all right, what's going to happen next? What could happen, and how can I benefit from it?
Yeah.
How do I show up in this time, and how am I going to play this? An example of this, like the other day, when Heidenberg Research shorted Icon, I was elated. This is the opportunity to buy into a guy that I love, because it was at 60 a share. It went to 20 and now it's back to 35. And, it's like I got in at, I won't say when, because now I'm a bit embarrassed because I moved a little slower than I wanted to. But the point is, like, I had a thesis that gave me a certainty to take a risk.
Yeah.
So, like, in this context, with the general, where can we? What's the practical? In closing,
Well,
what are you excited about?
I think that what you're saying, right? That is almost at the end of that opportunity cycle. Okay. I want to go further back than that. All right. I did a post on this recently. We 4th of July weekend, we went to Disney Springs for dinner at a place that we go incredibly regularly. And 4th of July week is the second busiest week in the Orlando theme parks. You've got Christmas, you've got 4th of July, you've got Thanksgiving, Easter, and so-called New Jersey week, which is sort of what they call up their teachers' convention, the first week in November. Those are essentially the 5 busiest weeks of the year in the theme park area here in Orlando. So we go to this restaurant that we've been to, potentially hundreds of times, almost on a weekly basis. And on what is, the 8th busiest day of the year, or whatever the heck July 3rd would imply, if that week is the second busiest week of the month, the place was half empty. Ooh. There's a bar area. At one moment in time, the bar didn't have a single person sitting at it. Never seen that. The slowest week of the year, we didn't see that. The slowest week of the year, we didn't see this few people at the bar, at a table. Immediately posted about that. As I've talked about this now for decades, Christmas time, I go into Macy's, Bloomingdale's, Best Buy, higher end stores. How's things going? What are you selling? Eyewitness economics.
You do that.
I do that.
Smart.
And I posted on this. And then lo and behold, 4 days later, what do I see? I see articles all over the place. Slowest Disney summer in years, right? And so I was out ahead of that, just because by the time you hear about it, dude, it's too late. Now, it might not be too late to make money. When's the best time to buy a house? 5 years ago. When's the best time to buy a stock? 5 years ago. When's the best time to start a business? 5 years ago. Trying to time the market? Impossible. People smarter than us can't do it. So how do you potentially get smarter than the people who are smarter than you? Elbow grease. Put in the effort. If you're interested in investing in a stock or in stocks, it's as simple as, do I like it? Do people buy it? Do other people think similarly? You might say, hey, I'm thinking of buying Nike stock. Right as we're sitting here, do you wear Nikes? Yes, I do. No, I don't. Have 100 other conversations. You speak to 100 people who say, I really don't wear Nikes anymore. There's probably something there. You speak to those same people and say, yeah, I just heard they're coming out with this new shoe, and it's, there's probably something there. So I think it starts much sooner than what you're talking about. By the time people start buying or selling the stock, it's really too late to make real money. Now, you still might be able to make money. Now, in full disclosure, I did something similar with Western Alliance Bank a few months ago. when everybody started making a run on all the regional banks.
Wow.
I thought that they were the best of one of those. And the stock went from like whatever it was, 40 to 10. I called up my guy and I said, we got to buy Western Alliance. And we did, and we made a killing.
That's awesome.
You know,
Awesome.
but again, you know, did I buy it at the bottom? Probably not.
Okay, so you're saying to get the exponential, you're in the elbow grease,
Yes.
in the mall and that doesn't discount the 40 to 10 and gone, but these are different paradigms. And the one of the lessons from this conversation today is, with everything happening, get in the trenches, get one's hands dirty, and capitalize on the opportunity. Because it seems like something I'm taking away from this, like less cliche than what I just said, is because that's like a duh. Extreme volatility follows. ... I mean, how could it not, with two conflicts of vision?
Yeah.
It's like living in two different universes. For both parties to wake up, there needs to be an explosion. I'm not saying a great reset. I don't know any of that stuff. I'm saying like volatility. What I'm saying is volatility. Like up, you know, it's those little spikes that we're gonna.
If you're gonna trade the volatility as you suggest, right? So I
don't mean this in a macro Wall Street sense. I mean this like in our businesses.
Yes.
Like
Yeah.
for the entrepreneurs listening to this, right? Even in our circumstance, like how, right?
How do you understand how to lose small and win big? Okay. So if I'm creating a roadmap to that, Jay, and just to digress for a second, because let's talk about the Western Alliance bet. There were many people, myself included, who made a bet on Lehman in 2008. Stock got crushed. They're not going to let Lehman fail. And they did. So I think a mistake that investors oftentimes make is that their bets are purely based on current day price relative to former day price. I think that that's sort of fool's gold oftentimes. And I know, you love, Warren Buffett, and you went to, their thing.
Well, I like Munger. I put up with Buffett.
Well, there you go. Okay, fair enough. They buy good companies. So that's the elbow grease, right? So I think that the roadmap, the blueprint for me, whether it be investing or what I do with bonds, or whether it be what, business and what I do with business, is you got to know the shot first, a la Glengarry Glen Ross. So what's the shot? If sneakers are going to be obsolete tomorrow, I don't care what yesterday's price was. You'd be stupid to trade it, right? So first of all, what's the shot? Is this a good business? Is this a good sector? Is this a good market? Is this a good moment in time? What's the value proposition? Is the management right? There's a million different things that go into this. And so where does that sort of stuff start for me? It starts by what I used to do, going to lunch in the mall once a week, walking around, observing, do people have bags? Do they have many bags? Do they look happy? Do they look sad? This is all easy shit, dude. Okay. Walk into the store. Has this store always been busy and now it's empty, or vice versa? Ask the people, how's business? What do you say? How about this, Jay? The business is super busy. And so I want to walk out. This is booming. I'm going to buy. No. What are you selling? We're selling, packs of gum, in the rack at the checkout. What do you usually sell? $40,000 TVs. Wow. So on the figures lie, liars figure, right?
Yeah.
More people than we've ever seen walking into this electronics store. Everybody walking out, attachment rate through the roof, right? More people with a bag and a slightly bigger bag. I walk out saying I got to buy that stock, or I've got to go long on the economy, short on bonds, right? And what I didn't do was I didn't figure out that everybody's buying 3 of the cheapest things that store sells. And 3 months ago, they all bought one of the most expensive and high margin thing that store sells. Or a third of those, not all, it wouldn't be all, but a third of those people. And would I rather sell a third of my highest margin, highest price point product, or 3, 1 pack of gum, 1 box of Swedish fish, and a TV guide? $5 in sales, 2% margin, 30,000 in sales, 20% margin. So it's everything. And ultimately, it's bigger than even what you said. And I've said this before, I think, on this show. I'm plugged from the fucking matrix. I read these reports as a skeptic. I am cynical about these things, not on both sides. If it's a good report, I'm looking for why that's not true. If it's a bad report, I'm looking for why that's not true. Because if there's money to be made in the example that you used, right? There's even more money to be made in not being lazy, okay? Because on balance, everybody else that's looking at the same thing that you're looking at is going to be lazy.
Okay, so let's use an analogy. When we look through a company's financial reports, that first X amount of pages, the shareholder PR piece, isn't that, in a sense, we're the shareholders of this equity, and that's the PR piece that you're talking about?
Yep.
And if I'm investigating an equity, I've got to really understand the balance sheet, but really even more deeply to know if it's telling the truth or not. Understand the value proposition, understand the management, understand, et cetera, et cetera.
Correct.
And the same thing applies with understanding what's going on in the economy, actually. And because the economy it's like one giant business. We're the employees.
Maybe.
I mean, I'm trying to figure out whether the employees are the customers. I'm trying to figure, but we'll have to explore that in part 2 on this.
Yeah.
But am I understanding that analogy, or I'm making up an analogy to try to follow what you're saying? Reading the headlines, that's almost like the filtered down PR piece. Just, you're too dumb, or you're too uneducated, or you're too far away from what we know. But this is really what's going on. Everything's going to be all right. The institution's caught up in its own self-deception, because that's a byproduct of power. And if we want the opportunity, us as individuals, to really know what's going on, we got to dig deep with the elbow grease. First of all, question everything.
Question everything.
Okay.
Question everything. I'll give you 2 examples here, okay, of sort of somewhat disparate complexity and industry. Microsoft. Let's assume you never heard of Microsoft for a second, Jay. And I said to you, I have a tremendous business/investment opportunity for you. And let's assume in some alternate universe that the only good thing that Microsoft ever did was buy DOS, right? And actually a comp to that was sort of like what Apple went through. They invented the first great computer and couldn't replicate that for a long time. So if I said to you that there's this great investment opportunity, And this company went from 0 to $1 trillion, in a very short period of time. I think you should buy it. And you go, great. And here's what I leave out. I leave out that they haven't innovated for 30 years. I leave out that they only have had one product that has succeeded. DOS, Windows failed, the Surface failed, the Xbox failed, again, in some alternate universe, right? But they made so much money off of DOS that they're still a going concern. You're like, this is a great opportunity. And then 3 months later, they closed their doors. Well, of course they did. They haven't innovated in 50 years. They had one product that made sense, a product that in 3 minutes is going to be obsolete. Because what I didn't tell you was that we still use DOS to send people to Saturn, and Saturn is the biggest new industry. And so we're making a fortune. But tomorrow they're going to change over to, Google OS. You look at this Live PGA thing, and I sort of chuckle over this because of where I live. I'm sort of in the middle of a bunch of professional golfers, and then of course our relationship with Patrick Reed, and so I have some inside knowledge, just enough to make me dangerous, right? And the media telling everybody that Live is funded by these monsters when the PIF sponsored the LPGA and many tour events. That in and of itself was nonsensical, right? the FedEx Cup, one of their biggest investors is PIF. Okay, so when you talk about what what they want you to know in their prospectus, or what the media wants you to know, I mean, that's as big an example of that as anything. But then when you even begin to scratch beneath the surface, when reports emerged and then later details about this PGA Tour Live merger, all of the PGA Tour shills talking about how Jay's going to control it, and this and that, and this and that. And anybody that knows anything about business or anything about it in the inside inner workings of this whole thing, we're like, what are you, crazy? You think that PIF is going to give you $4 billion and let them do whatever they want to do? And then all of a sudden this stuff gets leaked, and they have this testimony. And now you have the one video I watched last night that I chuckled about, Riggs from Barstool, and a total 180 on the tour. These guys were arrogant. They were smug. I knew 6, 8, 10 months ago, 12 months ago, that Greg went to Jay. Oh, and I'm talking about these guys on a first name basis like they're my buddies. They're not. But Greg went to Jay and said, we want to invest.
Yeah.
We just want to get involved. And we'll work it out. And Jay didn't even take the call. Now all these folks know the real story, know that half, 3/4 of these guys on tour weren't happy, know that you have a nonprofit that only takes 3% of their revenue and gives it to charity, and flying private jets, and their headquarters is a palace. Okay. And all of them are all of a sudden coming around and saying, wow, fuck, man. The tour really is in a position of weakness here. They never should have done this. A lot of this stuff is antitrust. Now we're looking, is this really a charity? Dude, if I knew this 6, 8, 12 months ago, what do you think people who really knew the information? How long ago did they know it?
And how are they benefiting?
Right. So.
Do you believe that, in closing, the next 2 years, 3 years are going to be prosperous for people that have an inkling of intuition and a bit of courage to act, period, or question mark?
Tremendous opportunity that exists, as it did in 2008, as it did, during Brexit, to whatever extent here onshore, we were able to take advantage of it, as did COVID. You know, I think that the fool's gold is in trying to time things perfectly. I think the fool's gold is in irrational exuberance. I think that if you unplug from the matrix and you scratch below the surface and you roll up your sleeves and get that grease on your elbows, I think that if you endeavor to lose small and win big, right? You can be smart about it because there are no guarantees. You know, I could tell you what I did do is I said I don't manage my own money. I said to my guy, Frank, shout out to Frank, because he makes the decisions, but we do collaborate, right?
Yeah.
Obviously, I'm in the financial markets, albeit on the bond side. So what the conversation we had about 2 weeks ago was, I was at a point where I said, sell all of our winners. And we had very few losers, but we had a few, two of which were Apple and Tesla, which I believe in. And so I said, hold these losers. A few months ago, we started moving into bonds because I said to him, look, if we're getting 6% on some of these corporates, we're getting 8-10%. If I'm happy with a blend of 8% and I'm thrilled with a blend of 10, and you're my best friend for life at 12 or more, why the hell would we take risk at 6% ish, 7%? Take the risk off the table, put it in bonds, and here's how we win-win. If I'm right, we're not stuck in the bonds, because as rates go down, we could get out of the bonds at a better price and then jump in after this 10 or 15% correction that is very possibly coming. If I'm wrong, I'm still clipping the coupon and making 6-7% anyway. So, okay, it wasn't 8-9%. My feeling was I'd rather be early than late on the correction that I do believe invariably has to happen in stocks.
Oh, wait, and that makes sense. If people think inflation is higher than it is, then wouldn't that just hyperinflate stocks? Because everybody doesn't want bonds. If the general cultural milieu is inflation super high, all the financial advisors are saying, dude, you don't want to hold bonds right now. You need to own more stocks because stocks are better in inflation. So like that could even inflate stocks even more. I'm just like randomly having this thought. You're breaking down.
It's a more complex thing than that. But theoretically, if we are overestimating inflation, that is,
then we'd be underestimating fixed instruments.
Yeah, that would move you. It might not completely move you into stocks because inflation, if you believe inflation is high, you could also believe that that's going to affect, businesses, and certainly inflation sensitive businesses. Vis-a-vis wage increases, that's going to erode profits in many businesses. But you also don't want to be in bonds either. So I agree with you there.
Yeah, my question would be, how does the lay person, right, the 85, the 90% perceive stocks in inflationary period? And my guess would be that they perceive it as bullish.
Yeah, I would say higher level, right? If we're overestimating inflation, which I believe we are at this point, rather than what it does in the now, what I would more argue is it's going to create an oh shit moment. Okay? Because when we get to the point that we see inflation at 2%, I'm going to almost bet that it very likely is -1%. And we're actually into deflation. And when we have that oh shit moment, there's going to be a flight to quality in bonds. And a movement out of stocks. If nothing else than just that we might be overestimating the oh shit moment. This pendulum in the markets, you cannot deny that. You have to be aware of the pendulum. So we've swung too far this way. It's going to swing maybe even too far the other way for a minute. Okay. So I do believe that there's going to be an oh shit moment, and I want to be early to that, not late than that, in my opinion. Because bonds are yielding high enough that I can afford to be early to that moment. In 2008, in 2020, maybe not so much. What do I do? Put my money in 0% cash and 0% bonds? But at 3, 5, 8, 10%, there's massive reward for being early. So that's my move right now. I want to be early to the oh shit moment. I want to be in bonds. Can't get hurt by being in bonds. I'm not in 30-year bonds. Everything is a year or less. It's safe corporates. And then Frank and I are laying in wait for that oh shit moment to rotate back into stocks.
I think we should end with I don't know if a disclaimer, we're not getting financial advice or anything of it. I feel like nowadays it's better to just say that. I'm just having these curiosities, and Phil is just brilliant on all these things. He lives what he talks about, and he actually creates value. I can say this in the marketplace, and doesn't have a course to sell at this time on this. So this is more of just a theoretical conversation. We're not selling financial advice or anything of that nature. Phil, thanks for coming on, my friend. I just want to give you the last word before the listener will have to listen to part 2 on this, where I have a lot more questions now about my retirement. So, but anyway, what final thoughts?
Bulls and bears make money, pigs get slaughtered, figures lie and liars figure. Unplug from the fucking matrix. 9 out of 10 people statistically are followers. If you don't think that leaders know that, leverage that, bet on that, then you're missing the opportunity.